Holy smokes, everyone. This is an urgent breaking news update. We have just got the latest CPI data, and everyone, it was a shocker, or should I say it was a shocker for those that haven't been following the channel. CPI came in much worse than expected. So this is going to have a big effect on interest rates or mortgage rates, and this also means there's going to have to be much more interest rate hikes than the Federal Reserve is currently projecting. So everyone, let's not waste any time. Let's get into the news, the facts, and the data. Look at this, everyone. Inflation rises 7.5% over the past year, even more than expected, and it's the highest since 1982. But people, what you have to know is they changed the way they recorded inflation in the 80s. So real inflation is actually at 15%, and this is an all-time high compared with 15% inflation in 1981. And I think you know, if you're looking at your grocery bill, if you're looking at your fuel costs, inflation is much more than they're saying of 7.5%. And I'll also show you the biggest flaw in the way they calculate the CPI and the reason why it is much lower than it should be. Now, for those wanting to know, month over month, it did increase 0.6% in January versus the 0.4% expected. Core inflation rose 6%, which is also a notch higher than expectations. And also the jobs market is continuing to strengthen, with weekly jobless claims declined to 223,000, below the 230,000 estimate. So what that means for the jobs market is the jobs market is getting tighter and tighter. This gives more room for the Federal Reserve to lift interest rates, and we're also seeing wage inflation is starting to get higher, with wages increasing 0.7% last month. So then that means inflation become more entrenched if people's pay goes up and they can somewhat afford to pay these higher prices. But I think we all know in real terms people's wages have been on the decline for the past 40 years. But now let's have a look what the markets are now pricing in for interest rate hikes from the Federal Reserve, because there's just been a big shift since this data has been released. So the chance of a 0.5 percentage point Fed rate hike in March rose to 44% following the data release compared to just 25% before. So will there be a half a percentage point increase in March, everyone? The markets are now starting to think it is much more likely, but it is still below 50% unless we get another hot inflation reading in March. The chances of 6/4 percentage point hikes increased to about 63% compared to just 53% before the release. And this is what I've been warning about, everyone. Don't believe what the Federal Reserve is saying. Don't believe what the media is saying, whether it's just going to be 3, 4, 5 rate hikes. People, what you have to know is with inflation, what they normally have to do to fight inflation is to bring interest rates up to match inflation. So what they're going to have to do to bring inflation down, if they're going to be serious about it and not sacrifice the poor and middle class to keep these bubbles going, is they're going to have to bring interest rates up to 7% to match it, to bring it down, or at least at the bare minimum 5%, because there is so much debt in the system compared to last time. But let me show you what prices are actually increasing the most and show you how flawed the CPI is. So on a percentage basis, fuel oil rose the most in January, surging 9.5% as part of a 46.5% year-over-year increase. Did you hear that, everyone? Fuel oil rose 9% in 1 month and is up 46% in a year. They need to do something about this inflation, people. It is not a joke. This is literally destroying lives as we speak, and the Federal Reserve is telling you to suck it up. Don't worry, it'll go away on its own. Energy costs overall were up 0.9% for the month and 27% for the year. Now, something that has been a big contributor to CPI is used cars. Used cars have been skyrocketing, and they said, don't worry, this will go down, and then that will bring the whole CPI down with it. Well, it's not, everyone. Vehicle costs, which has been one of the biggest inflation contributors since it began surging higher in spring of 2021, were flat for new models, but were up 1.5% for used cars and trucks in January. The two categories have posted respective increases of 12% and 40% over the past 12 months. Well, people, it is getting very expensive to own a car right now. Used cars are up 40% and fuel costs are up over 45%. But the biggest joke of the CPI is what they're saying is happening with shelter costs, aka housing costs. Shelter costs, which make up about 1/3 of the total CPI index, they said increased only 0.3% for the month, and they said is only up 4.4% over the past year. People, that is a complete joke. House prices have gone up 20% in most locations, and rents are also increasing 10 to 20%. There's absolutely no way shelter costs are only up 4%. And what did they say? This makes up about 1/3 of the CPI, and this is what's keeping the CPI so low. But the most alarming trend that's happening with the CPI is this. Food costs, everyone. Food costs are accelerating. They jumped 0.9% for the month, and they're up 7% for the year. So what that means is if you annualize it, and remember every month it compounds, food costs are going to increase over 12% during the next 12 months. And you think families can afford another 12% increase when they've already got surging fuel costs, when they've already got surging rents? No, people, they can't afford that. And unfortunately, what's happening with inflation, it's hitting everything that's a necessity for life: transportation, food, housing. This is not something people can just cut out. And look what happened to the 10-year US Treasury after this data was released. Well, the 10-year Treasury hit 2% for the first time since 2019. And this is what I've been warning about, everyone. And this is what I've been warning for the housing market. I did a housing market video the other day. I said mortgage rates are going to go up. A lot of people didn't believe me. They were saying it's all doom and gloom. But people, you have to be patient. This will play out, and it's playing out right before our eyes. But what you're probably wanting to know is, okay, what does all this mean in simple terms? What this means is, everyone, the Federal Reserve is lying. Don't believe what they're saying, that inflation can go away with just 5 or 6 rate hikes. No, people, to bring inflation under control, if they're going to be serious, they have to bring interest rates up to meet inflation. Now, what could happen is they could raise interest rates to 3 or 4%, and inflation could fall to 3 or 4%. But we have to see. Now, what this means is, everyone, the Federal Reserve played a very dangerous game of hoping inflation was transitory and was going to go away on its own. But now what we see, people, it's not transitory and it's not going away, it's getting worse. And they need to act soon, otherwise people are going to get very angry and they're not going to be able to afford the basic human essentials. So everyone, that was just a quick update with what's going on with the latest CPI data. What do you think about this? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. If you're interested, get up to 5 free stocks with Moo. I'll put a link in the description. Thanks for watching. I'll see you in the next video.